Right. So earlier in the week, I had sent over a video of another instructor going over stop orders, which is not something that I use often. However, a few of you have mentioned how some of your pairs just melt. And by the time it comes back for a retest, it's, either a day later or it's, a little bit too late or it just keeps melting. And although I personally use limit orders, I think that you should be very well, aware and knowledgeable of how stop orders work as well. Because if it works for you and your pair, then that's something that you need to be implementing. Now, I like to use orders because it eliminates me from having to feel like I have to look at candles. So I know, like I show you guys, oh, wait 1 to 3 candles, wait 1 to 3 candles or whatever. But in the future, ideally, the goal is for you not to be sitting there like just looking at candles. The goal is for you to be comfortable in your analysis and placing orders. Okay. Now, if you are a Fibonacci user, orders are probably something that you will implement, even those of you that may trade zones in market structure. Okay. If you have any questions about that, I can't go over that at the moment. I just want to stay on topic. So that's what we're going to go over. I definitely think this is something that people should implement in their trading plan. I think it gives you a peace of mind. It also helps with the anxiety. So like instead of just waiting to see where the market is going, you're kind of already presetting where you expect the market to pull back to, and you're getting prepared if it does do that. So this is just an example of what they are. A buy stop, oops, excuse me. A buy stop, oh, I can't use my mouse for whatever reason, it won't let me. But a buy stop is basically when price is below the mark, below your entry area. Dang it. Sorry, I'm really upset I can't use my mouse. So in a buy stop, that basically means that price is below where you want it to enter. And I'm going to give examples. So please, like, no, I can't see the chat or anything like that. And once price goes through that area, through your ideal either zone or level, then your trade's going to be automatically triggered for a buy. Now, you have to pretty much overall understand the trend of the trade so that you can avoid drawdown. But that's what a buy stop is. It's basically price being below your level that you want to see price move through. And it just, it goes through it. It gets triggered once it touches it. Now, a sell stop is pretty much, the same thing in the opposite direction. So a sell stop is when price is above your ideal area, and you want it to get triggered once it goes down and hits it. So once price goes down and hits it, it's triggered. This is what a lot of you have pretty much been expressing a concern about because you weren't getting as big of a retest as you anticipated with some of your trades. So this is something that you could essentially implement in your trading plan. All right. Now, a sell limit is when price is below. So basically it's broken through your level, but now it's coming back to retest. So whenever you see a limit order, that's usually when you're expecting to see some type of a retest. A buy limit is the opposite, when price has basically it's come through and you're waiting for it to essentially land on top. So whenever you think of limit, think of a retest trade. When you're thinking of a stop order, that's just when price goes straight through your area, straight through your entry area. So that's what it is with a stop. Excuse me. All right. So again, this is just a definition. A limit order is an order placed to either buy below the market or sell above the market at a certain price. And this is basically once price reaches that limit price, you will get activated. All right. So that's what a limit order is. I essentially just reword all of this to say that it's a retest trade. Okay. If you're looking for a retest, it's a limit. And these are examples, again, of buy limits and sell limits. So just, again, just something for you guys to use as reference. Again, now a stop entry order stops an order from executing until price reaches a certain price. So basically, again, an order is placed above the market or below the market, and it gets activated once price literally triggers it. Once it touches it, that's it. Your order is activated. Even if it goes in the opposite direction, it doesn't matter. You've put a stop order, so it will get picked up the moment that price has touched that area. And again, examples of buy stops are literally just it going through your resistance, going through your support and going through your resistance. So you're buying if it goes through the resistance, and you're going to sell if it breaks through that support. So those are anticipating usually break trades, like when something gets broken, not the retest. We're going to look at some examples. So I just did these. So excuse me if there's any errors, but I just did them. As you can see here, I have identified the previous high with 2 arrows, and that's essentially the area that I would be looking to be broken. Now, with buy stop orders, you are anticipating the market to break in this case, previous resistance. So you're looking to buy, but you don't know if it's going to come back down for a retest. You're anticipating a lot of momentum. You want to be prepared to catch the move, depending on what type of a trader you are. When that happens, you would implement a buy stop. So one technique is to look at the previous highs, move your order slightly above it, just so it doesn't wick it and close below. And that doesn't guarantee that it won't, but you just want to move it slightly above those previous highs. And the moment price goes through that blue line, my order is now activated. Okay, so that blue huge engulfing candle will trigger my order the moment it touches it. So this is a 4-hour candle, meaning that the market has been moving for 4 hours, up and down, up and down, up and down. As you can see, I had a long wick at the bottom. So there was a time where it looked like maybe a bearish engulfing candle or something bearish, but it respected that support and it broke through. My order gets activated the moment price touches that, and then it went straight to market structure, as you can see. I put the stop loss just below that structure, anticipating that it's, I'm just here for the impulse. I'm not worried about that retest coming back down. I'm just here trying to catch that quick move just to make some, some profits. Now you can hold the trade if you want with a buy stop, but this is just something that that I'm just going over with you. So that's a buy stop. A sell stop is, again, the same thing, but in the opposite. So you can see where I've notated the previous low. And in order for us to see a continuation in the trend, I'm looking for the previous low to essentially be broken. And let's say I don't want to wait for a retest right now. So I put a line right where the previous low is, and I move it slightly below. So where you see I have the arrow that says previous low, I moved it just slightly below, just so that I don't get faked out with like a double bottom. And once the market goes through that blue line, which is that huge engulfing candle, my order has now been triggered. And I put my stop loss slightly outside the trend line, just in case if it decided to do a retest, I'm not pulled out of my trade. But you can see with just a sell stop order here, we would have been able to take advantage of the trade, and we would have at least been able to take it to market structure and then taken our profits, understanding that, it could be doing a retest after that. But that's how you would implement a sell stop. So you're looking for it to break the structure. If you find yourself constantly missing out on trades because it doesn't retest until 2 to 3 days later, and you feel like you want to take advantage of these impulsive moves that your pair is giving, then you do want to start implementing sell stop orders. So the only concern with sell stops is that obviously if that engulfing candle would have closed above it, your order would have still been triggered, and it decided to go in the opposite direction, you would have gotten stopped out. So it's very important when utilizing orders that you do enter a stop loss and you understand your risk management. It's very important, because if the order doesn't go as planned, and the goal is for you to walk away, it's not for you to stare at your computer. So if it doesn't go as planned, you already know, okay, if this trade doesn't go as planned, I'm losing, I don't know, $70, $150, 200, whatever your number is, you're comfortable with that number and you can just walk away. So that's a sell stop. A sell limit is a retest trade. So this is the same pair, but instead we're waiting for the break to occur, which already happened. So some people would have taken advantage of the break during the sell stop. In this case, we're waiting for the retest to occur. So we're waiting for a break of structure and for the market to close below that structure, just giving us a little bit more certainty that it's going to give us a impulse down. All right. Now, the cool thing about like what I like about this is that the accuracy for these are pretty high. And it kind of just makes me feel a little bit better as a trader that I know that a structure has been broken and it's essentially retesting it, which is one of my confirmations that there's going to be a nice move occurring after that. So you got the break. And then what you're doing is you're waiting for the retest. And I literally just used market structure for that area where you see sell limit. I have my stop loss. My stop loss should have been up a little bit higher, to be honest with you, just so that it's outside the trend line. I was just quickly doing this. However, you have those two candles right there that gave you a sign of rejection where we want to see it, and then gave us that push down. So whenever you're looking for a retest, it's a limit. So remember, retest ends in T, limit ends in T, right? Stop, P, whatever, stop, and then that's something else. But limit, at least think retest. They both end in T. Excuse me. A buy limit, same thing. Right here, we have where I have the buy limit line. That was the previous structure. That was 4-hour structure. I didn't want to put two lines on there and confuse anybody, but we were waiting for it to be broken and then land on top. So for a limit, the price has to be above my ideal area because I'm looking for it to come back down and retest. So where you see my green arrow, and I have labeled as retest, was basically the area where our resistance was being respected and then turned into a floor, which is ideally what we're looking for whenever we're wanting to get into a trend continuation trade. So I would set a buy limit here because price already broke through my area, but I'm waiting for it to land on top. Okay. You guys, if you're chatting, at the end, I will go ahead and talk. So that's how you implement a buy limit. And again, I move my stop loss below my trend line, below my zone, and below those previous lows, just to be on the safe side, okay? So that's a buy limit. So remember, whenever you're looking for a retest, that's a limit order. When you're looking for it to break through an area, that's a stop order, all right? So you need to know which is which. If you don't know what a break and retest is, you need to go back into the training and practice the homework. All right. Now, the second thing that we have to go over is how to enter this in MT4. Now, I do actually have a Droid and an iPhone, but I don't have MT4 on my Droid. So I'm just going to show you on my iPhone because I literally just took this screenshot and created this. I did this in like 10 minutes. So I didn't have time to be as thorough as I wanted to. Okay, so the first thing that you're going to do is down at the bottom, you can see where I boxed in the trade tab. So you want to make sure that you're in that area. And on the top right, you're going to click the plus sign. So that's the first thing that you're going to do. The next thing you're going to do is you'll see where it says market execution. You want to click on that, and that's where your order options will be available. So you have your buy limit, your sell limit, your buy stop, and your sell stop. And it has the buys in blue and the sells in reds just to kind of like psychologically help you make sure you're picking the right thing. Once you've done that and select the order type, you'll then go to this area right here. Like it'll prompt you into this window, and you'll set your lot sizes, as you guys know, which are right there in those numbers, but you're literally going to copy and paste your numbers from TradingView. So whatever we had as the buy limit or the sell limit price, you're going to put that number in the price section. That's the price where your order will be triggered. Now, sometimes when you tap in there, it will automatically put a number. Just highlight it all, delete it, and enter your number from your TradingView. And you can always copy it from TradingView and paste it on there, or remember it and type it in. It's completely up to you. You also, again, you want to make sure that you're implementing a stop loss whenever you're doing this. So you have to understand where to put your stop loss. Identify those numbers, copy and paste them. Same thing with take profit. You don't have to put a take profit. If you like to leave yours open, you can do that as well. But you definitely have to put your price in because that's where your order is going to get triggered. And then I would put a stop loss in for sure, just so that you can calculate your risk management appropriately and not go to your MT4 with like a surprise and you lose a large percentage of your account. It just wouldn't be smart. Now, expiration is something that you don't see a lot of people cover. but you can actually set expiration dates for your orders. Now, I personally do not set one, but if you like, if you're very detailed, very structured, and this is something that you want to implement, you have this option. So if, let's say you're looking at your charts on Sunday, you have a busy schedule, you have Sunday or Monday night to look at your charts, you look at the ideal areas where you want to see a retest, you're confident about your trade, you can actually set these orders up and have them expire on Friday or the following week, so that as long as the trade is going as planned, it will trigger regardless. Now, if it doesn't get triggered by your expiration date, it will delete from your order history, and then you won't have to worry about that order getting triggered again. So let's say I'm looking to get into a sell for GJ, and I like, usually when I look at my charts on Tuesday, they'll start to trigger by like Thursday. So I know that if I'm going to put an order in and I want an expiration, it has to be after those days, because it usually takes 2 days for my trades to play out after I've analyzed them. So I know that if I'm going to put an expiration, I'm going to give it till Friday or give it till Monday to make a move. And then if it doesn't happen, it automatically deletes. Or I can delete it myself manually in the trade section area, the trade tab. So that's just something that you can do. Now, with that being said, I know I quickly went over it. I was not able to use my mouse for some reason while I had it in play mode. So I have no problem going back and using my mouse to hover over anything. So I'm going to give you guys the option to basically unmute yourself. Give me a second. And then if anyone has any questions, go for it. And I'll one at a time. Are y'all there?
Yeah.
Nobody has questions? All right, y'all know what's going to happen. I'm going to end this meeting, and then nobody better be in my inbox or tell me they're confused. Now's not the time to act scared or be an introvert. Now's the time to be a student.
I have a question.
Sure.
So the limit is for the retest, you said, right?
Yes.
Okay. And then when it breaks through, that's for the order.
That's the stop.
Okay.
So a sell stop, like right here. Can you see my mouse?
Yeah, I can see it.
All right. So this is the previous low. I put my sell stop a little bit below it, just in case if it try to like wick it and go back up. So I put it just a little bit below, and literally the moment it breaks that area, my order is triggered for a sell stop.
The sell stop. Okay, awesome. Thank
For
you.
the sell limit, it's the retest. So not this, but when it comes back and close below the previous structure, or like my fib area or my trend line, those things.
Okay. And then earlier you said if you are a fib trader or you use fibs, I forgot what you said. Did you say the limit is better for that, or the?
Yeah. Because the Fibonacci is measuring the retest. It's measuring the retracement. So whenever you're using Fibonacci, you will most likely be implementing sell limits or buy limits.
Okay, awesome. Thank you, because I've been using the fib.
Yeah.
I have a question.
Sure.
So how would you know where to put the stop loss again?
I use market structure. I use previous market structure. So I don't know if you saw right here, I said, I put this too high. Whenever there's a trend line, I like to put it above the trend line, because there's a possibility it could come back and retest that trend line. I would hate to be like stopped out and then it just goes down. So this one I had a little too close. I would move this a little bit higher, but I like to put it above the previous structure. If there's a trend line, I like to put it, where's that trend line? You see how there's a trend line and it's being respected? I like to put my stop loss below that trend line. And if there's a previous low for reference, I'll pull it back slightly underneath that, just in case if it decides to make a double bottom, I don't get stopped out.